Hi. Okay, fine. You're able to see? It's clear?
Good evening, everyone. I am CA Vivek Agarwal, Vice President of Agarwal Chartered Accountants Society. I, on behalf of the society, would like to welcome you all and our speaker, CA Shri Kali Prasad sir, to this very interesting and important webinar on the topic Features of Financial Statements of Non-Corporate Entities. I request all the participants to raise their hand in case they have any query, or they can post their queries in the Q&A section. Please note that the details of all our webinars, recordings, PowerPoint presentations, etc. are available on our WhatsApp channel. The link of the same will be provided in the chat box. Before we begin, I'd like to introduce the society. Agarwal Chartered Accountants Society is a family of professionals. It provides a professional platform to share knowledge and family bonding. It provides an opportunity to young chartered accountants to understand and learn the intricacies of profession from seniors. At the same time, seniors give back to the society by sharing their experiences and knowledge. They also learn new technologies from young members. ACS organizes seminars, webinars, lectures, and study circle meetings on various topics for its members, non-members, students, and for cross-professionals like company secretaries and legal practitioners. ACS was co-founded by CA Hari Agarwal and CA Madhusudan Agarwal in the year 2010. They have nurtured it for many years. Today, ACS has more than 400 families as members across the country, including several Central Council members and central ministers. ACS is connected on social media and members get their queries resolved electronically. ACS provides opportunities for new members to become good speakers and invites experienced national level speakers like CA Shri Kali Prasad sir, Advocate Shri Avinash Poddar sir, CA Shri Premnath sir, CA Shri Deepak Bolusaria sir, late Shri Jayaraman sir, etc. to deliver talks on various professional matters and life skills. ACS has organized family events for its members. Families share time, happiness, belongingness among themselves. Now it's my privilege to introduce CA Shri Kali Prasad sir, a person of exceptional humility and integrity. Just by coordinating the webinar with sir, I was able to learn some important life lessons, which makes me imagine how much more we could learn from sir through personal interaction. Sir, I would be very eager to meet you personally also soon. Sir is a senior partner in Kali & Co. Chartered Accountants, Hyderabad. Sir graduated in commerce from Nizam College, Osmania University, Hyderabad in 1972. Sir played cricket for the college and inter-university levels too. Sir passed in the first attempt CA Inter in May 1974 and CA final in May 1977. Sir was the youngest member of the branch at that time. Sir has been practicing ever since under the name and style of Kali & Co. at Hyderabad, now a firm of 3 partners. Sir has completed 48 years of professional experience to the professional service to the society. Sir is a peer reviewer with a standing of over 20 years. Sir recently completed level 1 of AI of ICAI. Sir has been teaching various subjects, accounting, audit, taxation for CA, ICWA, ICSI, and MBA students at various institutions for the last 40 years at ICAI, Hyderabad, Vishakhapatnam, Institute of Cost and Works Accountants of India, Hyderabad, Institute of Company Secretaries of India, Hyderabad, Badruka Institute of Professional Studies, Hyderabad, Bharati Vidya Bhavan, Hyderabad, Zavres Professional Academy, Pune, and several other places across India. Sir has addressed conferences and seminars organized by Administrative Staff College of India, Hyderabad, ICAI, SIRC, LIC of India, Bharat Electronics Limited, Fertilizer Corporation of India, Bharat Dynamics Limited. Sir is a sought-after resource person for CPE programs of ICAI. Sir is a faculty for the certificate courses conducted by ICAI. Sir has addressed members of FTCCI on CSR. Sir has written around 200 articles published in the Hindu Business Line. Sir has authored books on accounting standards, standards on auditing, company audit. Sir has reviewed a book on opportunities for CA in insurance sector published by the SIRC. Sir recently wrote an ebook on corporate social responsibility published by the SIRC of ICAI. Audit has been the mainstay of practice for Sir. Sir has conducted statutory audits, stock audits, internal audits, concurrent audits, bank audits. Sir has carried out statutory audits of branches of PSBs across AP and Telangana from 1978 and is still continuing. So with this introduction, I would like to present CA Shri Kali Prasad sir to the august audience. Sir, please take over. We welcome you, sir. Thank you, sir.
Thank you. Good evening, my dear friends. I should thank Vivek Agarwal for such a nice introduction. And he has taken pains to read through the whole bit. And so I welcome you all to the meeting. Feel free in case you've got any queries, you're always welcome to raise your hand and we'll solve it. My presentation is put into two parts. One is a PPT about what is it, how to go about it, etc. What is the background, why should we do that, and things like that. The other part would be I would like to demonstrate the Excel sheet giving a pro forma of a balance sheet, and would like to quickly take you through that. So if you people are ready, I'll start with the sharing of the PPT. You're able to see it?
No, sir, not yet, sir.
Okay.
You can find the share button, sir, at the bottom.
Yeah.
I think it's loading, sir. I think you have shared the screen, sir. Please select the window of the PPT to be shared.
Window of the PPT.
You can stop the share once, sir.
Okay.
If you go to the top of the screen, yeah, you have stopped the share now, sir.
Yeah.
You can share the window of the PPT, sir.
Now where is it?
Yeah, at the bottom, you can click on share again, sir. You can
Okay.
click on the green button and select the, in application windows, you can select the PPT, sir.
Has it come?
Yes, sir. Please start the slideshow as well, sir.
Yes. Yes, gentlemen, I think we're all set.
Yes, sir.
So here we go.
Yes, sir, please.
Financial statements of non-corporate entities. So as on today, I'd like to state at the beginning that all the opinions expressed here are my own opinions and not necessarily of the ICAI. It is based on the guidance note issued by the institute. So firstly, what's a financial statement? It's a profit and loss account and the balance sheet constitute annual financial statements. Annual financial information of the entity is portrayed in such financial statements. Unlike corporate entities, financial statements of non-corporate entities are not public documents. They are submitted only to few agencies such as the taxes department and the bankers, etc. We don't submit our statements to anybody. As on today, before the guidance note was released, there is no specific format for the financial statements. There were also situations which we come across as professionals, hybrid methods. So they want to use accrual basis for something, and they also use cash basis for certain other things. And I'm very sure most of us as professionals use only a cash basis because we're not very sure whether the client is going to pay all the money what we are billing them, and that will pose problems if you take it on accrual basis. You charge a client, say, about 1 lakh rupees, and he ends up saying only, say, about 50,000 rupees. Reverse the entry, then reverse the GST. That will be a complicated issue. Significant accounting policies are not spelled out. They don't spell out any of their accounting policies. They simply make P&L account and a balance sheet. Even the cash flow statement is not made. The general financial statements are just signed by a chartered accountants as required by the entities. No report is issued. No observations are made. No UDIN is generated. Normally, it carries certain comments such as verified and found correct, and somebody signs. Or they say as per books of accounts. And the wording keeps on changing at the whims and fancies of the client and also the auditor. And in some cases, nothing is written on the balance sheet and on the balance sheet. And on the balance sheet, we only find one signature on the one side by the chartered accountant, and on the other side, it is signed by either a partner or the proprietor of the entity. There is no mention of the accounting policies or compliance with the accounting standards on the financial statements. So there's a lot of things required to be done in this manner to bring about a uniformity, to bring about a rationalization, and how to understand that. And since there is no UDIN, there is no question of mentioning UDIN in the statements. A financial statement should contain certain characteristics. One is it should be relevant. It will be relevant to the decision-making needs of the users. If somebody has got to take a call, whether to invest in the firm or the society or join a partner, they should be able to understand what it is.
Excuse me, sir.
Yeah.
So the participants are saying the audio is little low, sir.
Okay.
Can you try to plug out the headphones and try, sir? You won't be able to hear me, but we'll see, because your audio was better before
Okay.
without the headphones. As the
Okay.
webinar started, sir,
Okay. Let
you
me try.
can
Yeah, we can try.
unplug and see. If I have to speak to you, I'll call you, sir.
But I'll not be able to hear you, I guess.
I'll call you, sir.
Yeah, I'm able to hear you also. Fine.
Oh, great. Perfect, sir. Your audio is better, sir, now, much better.
Okay, fine. We'll do that as the participants wanted. Ultimately, they are the beneficiaries.
Yes, sir, please.
Yeah, now it is very clear. They are able to clearly follow what is being said.
Yes, sir. Yes, sir. Now it's much clear, sir.
Okay, fine. Then you want the relevance. It should be relevant to the decision making, and any user of the financial statement should be able to take his call, whether to invest, whether to take out, whether to change, things like that. Then there should be a faithful representation. The reader should accept that whatever we are saying is true and fair, which is not there as on today. There is no report issued, no third party is saying that, yes, that is right. It is only your word against mine. So that should be taken off. Comparability. We should be able to compare two units of the same industry for the same period to see how others are faring, or same entity for two accounting periods. So this comparison also is not possible as things stand as of today. And most important is the reliability factor. Whether we rely upon that or not, to what extent can I rely upon? Suppose somebody gives me a P&L account and a balance sheet, just signed by somebody. Now, to what extent can I rely upon that? Anybody's guess. And I have got to draw my own conclusions. And if I happen to know the chartered accountant who has signed, perhaps I could have a word with him, otherwise, no. So how will I take a call on that? Therefore, there had to be a remedy for all this. Then it should be on time. So I should be able to take my decision. It should be timely. And the person should be able to come out with his decision, otherwise it may be too late. And understand. The user should be able to understand the financial statements in a position whatever is given. So the only solution to all this is standardization. Like now we have got for the corporate entities, a standard format is given. And similarly, a standard format has been brought out. So the Institute of Chartered Accountants of India has come out with the standardization formats for non-corporate entities as well on the lines of the corporate financial statements. So the guidance note says that now we have got financial statements of non-corporate also on the similar lines of a corporate entity. The format as given by the ICI correlates with the format of the income tax return form. So we all file our income tax returns. So the financial statements, they correlate with the income tax department. It's the same format whatever we give them. As per the guidance note, these formats are mandatory with effective 24-25. So any of us who are adjusting the financial statements of 24-25 of any of our clients, we should ensure that it is in the same format and all the old formats are now given up. There is no acceptability for that. The balance sheets are to be made, but the attest function is not mandatory. In case of companies, we audit and give our report, but it is not mandatory for a CA to make a mandate. So we need not have that. Any financial statements, in case we are attesting, it should be as per the format and it should carry his report. Now, if you are signing any financial statement, you should also issue your report. So the report should be, again, well drafted. We'll have a separate session on how should that report be, because this is not mandatory. The format is not given. In case of companies, you've got formats, one format for those where AS is followed. One format is for those where AIS is followed. Here, there is no such format, but then whenever we are making an attestation, we should issue a report. The financial statement should also be accompanied by notes to accounts. Now we don't have any notes to accounts. We should have notes to accounts like what is their accounting principle for valuation of stock, what is their accounting policy for depreciation, what is their policy for various other matters. These financial statements should be complying with all the applicable accounting standards. Since all the applicable accounting standards are to be followed, depreciation is to be charged as per AS 10. Following income tax rates of depreciation is not permissible. This is a very significant change. As on date, the non-corporate entities, they simply follow the income tax rates of depreciation. That suits us. It suits us to put the depreciation schedule in the income tax return. We accept it. Whereas now, since all the applicable accounting standards are to be followed, we have got to follow only AS 10 and depreciation. And therefore, we have got to follow the rates as per the remaining useful life of the asset base we do in case of companies. And this being the case, hereafter, we'll find deferred tax asset and deferred tax liability also in case of non-corporate entities. There is a significant departure from the existing procedures. Also, I'd like to add here, though a bit out of context, when we do our tax audits, if your client is following the income tax rates of depreciation, please don't accept it. It should be as per the provisions of AS 10. There should be deferred tax asset and deferred tax liability. The other day at a seminar, somebody was asking me, then what should we do for the assets which have been existing from long? Recalculate the depreciation as required in the standard from the date the asset was first put to use, as in case of any other assets. And if it is not possible, then maybe take the help of a valuer or whatever method is to be followed, follow other methods, but see that the depreciation is as per AS 10. Don't simply follow the income tax method and simply keep quiet. It will not be permissible. Another significant departure is accrual. Being a basic accounting assumption is mandatory. So no more cash basis of accounting. There cannot be cash basis of accounting at all. You've got to follow only accrual basis. And if somebody is following cash basis of accounting, they have to shift to accrual basis of accounting. There's a separate guidance note of the institute on conversion of cash basis to accrual basis. Follow the guidance note, shift from cash basis to accrual basis. So as I said earlier, there would be deferred tax asset and deferred tax liability. Since we are attesting, if you read the guidelines of UDIN, if you are making any attestation, you've got to raise a UDIN. And you've got to put the UDIN also on the financial statements. Just as we put our UDIN on the reports of the companies, we should also put our UDIN on the non-financial, the non-corporate entities. All this slide, all the 4 points are significant. One is depreciation has to be as per the remaining useful life. Second is accrual is mandatory. Third will be since you are following the method of the remaining assets or remaining lifeline, you've got to follow that method. And because of that and the variation between the income tax rates and the method followed by you, there would be deferred tax asset and liability, generation of the UDIN, and you should also mention UDIN on the financial statements. So what are the advantages of the standardization? One is comparability, because there is a uniformity, they can be compared. Second is better understanding by third parties and stakeholders, because every financial statement is in the same format. People will be in a better position to understand what it is. Scalability and convertibility. You can scale it up or you can scale it down to the level of activity of the other entity, and you can make a good comparison. Improved transparency, better compliance and governance. This will be very important again. Better compliance with the standards, better compliance with the requirements of law. It facilitates financial analysis, streamlined audit procedures. This will help you in your tax audit procedures. It will not be, the day is not long when banks also insist that you give your balance sheets and other things for renewal of your limits also in the same format. In fact, one of the banks have asked me to address them on the same point as to what kind of a training we should give to their own offices. So they are already thinking on these lines. Be very sure very soon they are going to put this also as mandatory. Then how is it going to be? Hereafter, the financial statements shall be only in a vertical format. Now we make a T-form balance sheet, T-form profit and loss account, because we are used to it. Now it shall be only on a vertical format. Contents of financial statements are to be classified properly. Very clearly, as in case of companies, loan should be classified as secured, unsecured. Then from the related parties, long-term, short-term, all these details have got to be given. Whereas now we say loans, under that you say from X, from Y, from so-and-so bank, term loan, working capital, etc. That will go now. It complies with the basic characteristics of a financial statements, complying with the accounting concepts and assumptions. Again, the basic assumption being accrual, it can be only on accrual basis. The accounting policies followed ought to be clearly brought out in the notes to accounts. So when you're putting in the notes to accounts, you should say that we are following accrual basis. We have complied with the requirements of all the applicable accounting standards. We are complied with the depreciation as per the standards. Well, we have followed the stocks have been valued in whatever method they have valued. We have multiple methods. Previous year comparatives also are to be given. This again a significant change. When I'm giving you the financial statement for 24-25, I think also give you 23-24 financial statements alongside, just as we do in case of the companies. This is the format of the balance sheet as given by the ICAI. Name of the non-corporate entity, balance sheet asset, amount. Now, it does not say that, as in case of companies, that it should be in thousands or lakhs or hundreds. It does not say anything. It should state very clearly amount in rupees or amount in hundreds or amounts in thousands or whatever is the figure. You can choose. Then, if you see these, it gives particulars should give a note number 1, note number 2, whatever it is. Figures as at the end of the current accounting period. So that will be 24-25 for this year. And figures as at the end of the previous accounting period, that will be 23-24. Therefore, we can very easily mark out the movement in the figures. Then it has brought out again equity and liabilities. Owner's fund, that should be split into owner's capital, and the concept of reserves and surplus has come over here. Earlier, whatever was the net profit, simply add it to capital and take it as one figure. And again, drawings, nobody knows how much was the drawing. Simply take capital at the end of the year, add net profit and put a figure there. Now it cannot be like that. You should give it. And in the notes to accounts, you should be very clear the movement in the capital. I'll come to that when we come to the Excel sheet. Then we have got non-current liabilities. Just as in case of a company, we have non-current liabilities, long-term borrowings, deferred tax liabilities, and other long-term borrowings. Now here, if it is a deferred tax liability, I think, do we show it here in the non-current liabilities? No, that's a question mark which people should put to yourself and then decide. Deferred tax liability keeps on changing. I have my doubt whether it is proper for taking deferred tax liabilities to non-current liabilities and other long-term liabilities. Then the next set is current liabilities, being short-term borrowings, trade payables. In trade payables also, we have got to bifurcate into total outstanding dues of MSMEs, dues other than MSMEs. You've got to give the split. Because MSMEs have received a lot of importance these days, and we should bring out very clearly what is the amount owing to the MSMEs. Other current liabilities and short-term provisions. Significantly, in the non-current liabilities, they have not given the heading of long-term provisions. But in current liabilities, they have given the head of short-term provisions. So we'll take item by item. One is owner's fund. The movement in funds like opening balance, additions and deductions during the year on account of remuneration to partners, fresh contributions, interest, share of profit to be shown in a columnar fashion. Along with the drawings, resulting figure would be the closing balance. So the partners will have that partner's salary, remuneration to the salary, interest paid to the partners, any rents paid to the partners, whatever we pay to the partners should be. Also, mind you, from this year, you've got to deduct TDS from any payment we make to the partner, though it is not a part of this. You've got to mention that also. The next heading is reserves and surplus. On account of revaluation, capital reserve and surplus in profit and loss account should be disclosed here and not just added to capital. Just as we are now doing it, don't simply add it to capital. Take it to reserves and surplus. So it is not implied that there is a net profit and you put all the money in the given share to all the partners. It is not essential. You can retain some amount under the head reserves and surplus. If you are given to the partners, take it as part of the partners' funds. There could be a net loss. Then the debit balance should be shown under the reserves and surplus as a negative item, as we do in case of a corporate entity. Then it is the long-term borrowings. In case of long-term borrowings, you've got to provide from banks, from parties other than banks. Again, under this head, you've got to give clearly what is the borrowing from related parties. Earlier, this was not there. Related parties were not mentioned anywhere. And also, from parties other than banks, if you borrow money from a Non-banking finance company. Suppose you borrow money from a company like say Tata Capital, or you borrow money from Bajaj Finance, or you borrow money from IIFL, whatever it is, because they are not banks, that should go under this head. And deferred payment liabilities for the capital equipment purchased. Long-term maturities of financial leases. They can further be classified into secured and unsecured. And in case they are secured, nature of security also to be disclosed. Just as we do in case of companies, here also we should disclose what is the nature of securities, terms of repayment, along with rate of interest is to be disclosed. This much of additional information is now required to be given by the non-corporates as well. Then we come to short-term borrowings. Again, on the same thing, loans payable on demand. I say a working capital limit, there has been always a question as to working capital limit. It is perennial. We take a working capital limit this year, we go on increasing that, then why do you show it as a current liability? So loans to be paid on demand. A working capital limit is given only for a period of 1 year, and that is to be renewed every year. Since it is to be renewed every year, it gets into a current liability. It cannot be a non-current liability. So it should be bifurcated again into from banks, from others, including related parties wherever applicable, and other loans. To be classified as again secured and unsecured, just as in case of long-term borrowings, should give the nature of security, terms of repayment, including interest, is to be disclosed. Guarantees given by the proprietor, partners, or any others also to be given. There could be a partner who has given his personal guarantee for raising a loan for the partnership firm. Give the guarantee of the partner also here. Then another significant thing is normally we do that in the CMA formats. Current maturities of long-term loans to be disclosed under short-term liabilities. If I have got a loan which I have got to repay in a period of say 7 years, which I have got to repay in the financial year 25-26 should be shown as a current liability. And the remaining 6 years should be shown as a long-term liability. Not all the 7 years to be taken to the long-term liability. Current maturities repayable in the coming period of 12 months would be a current liability. Show it. And the remaining only will go as a long-term liability. Then we got trade payables. It should be shown as payable to suppliers of goods and services in the normal course of business. There could be a lawyer fees. There could be a technical valuation fees. There could be any other amount for the services rendered. There could be amounts payable to the transporters. There could be amounts payable to the service providers. That should be shown separately from those who have supplied goods. So that should be split into two parts. One is for the goods and other is for the services. And again, the details of the amount due to micro, small, and medium scale entities to be disclosed separately, MSME. And another significant change is that interest paid on delayed payments on dues to MSME to be disclosed. And I think we all know the income tax implications of this. Amount of interest due but unpaid also is to be disclosed. Other payables would be advances from customers, interest accrued but not due, interest accrued and due, payable to staff such as salary accrued and due, other regular payables, provision for bonus, GST payable, PF, ESI payable for that year, the contribution to PF and ESI. Then will be the short-term provisions. Income tax payable as per AS 22. Employee benefits such as leave salary, any other amounts to be paid due should be mentioned here, and payments to the auditors. For the year 24-25, it would be a provision, but for the earlier year 23-24, it would be a current liability. So payments to the auditors will come over here. So the asset side of the balance sheet, PPE, plant property equipment, then intangibles, like, share in the cloud of a software provider, as we take the share in the website of someone else, intangibles, capital work in progress. And here I've seen this is duplicated. In 1C, it says capital work in progress. In 2 also, it says capital work in progress. It's a lacuna. Then you've got non-current investments, deferred tax asset, long-term loans and advances, and other non-current assets. Here again, they have shown deferred tax asset as a long-term. Then the heading is current assets, current investments, inventories, trade receivables, cash and bank balances, short-term loans and advances, and other current assets, subtotal and total of the assets. And the advance tax paid by you, the TDS, then the credit balance to you, input tax under GST, have been classified under short-term loans and advances. I personally feel that there should have been one more line saying the taxes or the amounts lying with the government. There could be an amount due on, say, TDS. There could be a certain amount on refund receivable. There is a possibility that I go and appeal, my appeal is allowed, I'm entitled to get a refund from the department, which is not received as on 31st of March. And because the order has been passed, only the consequential order has not been given and the refund is not credited, I am entitled to show that money as refund receivable from the department. So I feel that one line such as the amounts with the tax authorities should have been added. So we go to the profit and loss account. Revenue from operations. Operations could be anything. For me, the amount I got to receive from, say, I might show as due from statutory audits, due from the bank audit, due from concurrent audit, due from tax audit, due from maybe GST, due from consultancy, due from tax services, whatever services we give will be shown as income from operations. Whereas for a trader, it will be only sales. There could be somebody who is running a cab service. So it could be only the amount received by rendering of the transport services. There could be somebody who is into providing air tickets. His income is not the amount of tickets he has given. It is only his commission on the tickets. There could be a chit fund company where his income from the operation will be only the commission earned by him, not the total value of the chits he is operating. So it should be very clear as to what items go into income from operations. Then other income. So other income could be refund of my income tax. We'll go here. Now here, we do not hold, if I hold a fixed deposit in a bank, my interest on fixed deposit will not get into the profit and loss account because that is my personal income. It will not enter into my profit and loss account of my business. Delete that. We find money profit and loss accounts having all the items and also income from my rent. I get rent from my house. I get rent from my premises. That cannot be going into the profit and loss account. You've got to make a separate financial statement for that, not for this. It is not your business operations. Then we got expenses. Expenses have got to be cost of goods sold, employee expenses, depreciation and amortization, finance cost, other expenses. Very clearly on the same lines as it is in case of a company, and total expenses. Then that will give you the profit before exceptional items. Then you got the exceptional items such as profit before extraordinary items, details of any extraordinary items. Then you get PBT, taxes. In that again, you got current tax, deferred tax, and you get PAT, just as we do in case of companies. Profit and loss from discontinuing operations, taxes on discontinuing operations, net profit or loss on discontinuing operations, total profit available for appropriations, and whatever we have distributed, whatever you are giving to the partners to distribute. Only the balance figure will be your going under the head reserves and surplus. So we'll go item by item. Revenue from operations, I think I've sold you. Sale of goods, revenue from services, grants or the donations received, other operating revenues, less GST on the above. Don't take GST to your profit and loss account because it is not your revenue. We are only a courier service. I collect it from a client and pay it to the government after offsetting any of the GST which I have incurred. Based on the nature of business, the operating revenue could include interest income and other financial income as well. If I'm doing a money lending business, I can get this. Cost of goods sold. We all know materials, purchases, manufacturing labor, changes in inventories, that is opening stock plus closing stock minus raw material. This does not need any explanation because you people are all knowledgeable, experienced, practicing chartered accountants. Then we go to the finance cost being interest, borrowing cost, loss on forex transactions on account of borrowed funds. Then we take to the income side being interest, dividends, gain or loss on sale of investments, gain or loss on sale of assets, forex gains, and other non-operating income. This is purely related only to the business being carried out by the entity. We don't take any item of a personal nature. And in the notes, you got to give the following details. Employee benefits have got to be split into, that is there in the notes, salary, wages, bonus, PF, ESI, gratuity, staff welfare. And also there is one line which said that, as we do in case of companies, where either 1% of the turnover or 1 lakh, whichever is higher, should go as a separate line item. This is where again, concept of materiality is roped in. And they have given the list of mandatory line items: power and fuel, rent, repairs to buildings, plant and machinery, others. This, if you see Income Tax Act, this is taken from there. Consumption of stores and spares, rates and taxes, traveling, bifurcated into domestic travel and foreign travel, insurance. Again, that should be split into insurance on buildings, insurance on vehicles, insurance for the professional indemnity, sales promotion, advertisement, and other expenses. All these are mandatory line items, irrespective of their percentage to the turnover or the amount incurred, whether or not more than 1 lakh. The format may be customized to specific needs. There could be only trading concerns or only service providers, like somebody providing a software service. Maybe their line items will be different from that of a manufacturing company, which is different from that of, say, a hospital, which is again different from, say, an educational institution. Ultimately, operating income, operating expenses will undergo a change. Other incomes will not. And if you see significantly, there is no provision or any mention of the auditor's fees in the whole of the profit and loss account. But that should have been included by the institute. Being the Institute of Chartered Accountants, they should have included one line item saying that auditor's fees. Because once they say that, it should be attested and a urine to be generated. I don't expect any chartered accountant to do an attest function without charging any fees. And having done, there should have been the provision for the auditor's fees in the financial statements also. So that's it about the formats, the significant things, etc. Do we take a small break here and you have got any discussions? Or should I go to the format? Should I go to the formats?
Participants, if you have any queries, please post the queries
Yeah.
in the Q&A section. Sir, I have received one question on WhatsApp.
Yeah.
They're asking, till now they have been following the depreciation as per the Income Tax Act for the financial statements.
Yes.
So now they have to follow AS 10.
Yes.
So they'll have to change the financials. That working will take time.
Yes.
That they have to do.
Yeah, they have to.
How will they do it in between? They're asking, sir.
Sir, in the standard, there is a provision that if you want to change the method of depreciation, change it backwards, right from the date the asset was first put to use, you rework the depreciation on a new method. The difference should be taken to P&L. Standard itself says that there is a provision in the standard itself.
Okay, sir. And another query which I have received is some of the clients follow cash system of accounting. So
No more cash.
Okay.
No more cash basis. Earlier, it was there that if you follow cash basis, they were saying that give a note saying that the accounts have been written on cash basis of accounting. Now they cannot.
Okay. And the third query which I have received is, sir, they're asking for few of the clients, they follow the inclusive method for the P&L account preparations and all. So they mention the GST also, along with in revenue from operations, and even the
Now,
expenses they mention GST.
Yeah, Mr. Vivek, one basic thing all of us know that GST is not your revenue.
Absolutely, sir.
You've got to follow AS9. And I have already mentioned about that, saying that we only do a courier service. I collect it from Vivek and pay it to government. I cannot take it to my revenue. Please change this method. And if you see the accounting for GST, should only have the input and the output. And if you have paid any GST, you include that. So inclusive method also cannot be done.
Is another question in
Yes, sir.
in Q&A section. Ms. Radhika ji is asking, sir, what about ratios?
Which ratios?
I think she's talking about the financial ratios that we incorporate as per the Companies Act format, sir. Are there any ratios to be mentioned in this as well?
No, the format does not say anything. The format does not say anything.
Okay, sir. And another query is that in the beginning, we have discussed about some report. So can you please elaborate what is the report for this, sir?
Yeah. Now, it is not mandatory for you to issue a report on these financial statements, point number one. And in case your client wants you to sign on that, you cannot make any attestation without giving any report. If you feel all is good, give a clean report saying that I've seen that. It gives a true and fair view of the financial statement as on that date. The drafting should be independent. Then in the Companies Act, they have given format of the audit report. You've got two formats on the Companies Act. One is where AS is applicable. Other is where in AS is applicable. There are two different formats of the audit reports. I'm sure the members should be knowing about that. In case they don't know about it, you better know about it. There are two audit reports to be given. The formats, as per the standards, you're going to give reports. There is no standard given on the report of the non-corporate entity, and therefore you got to draft because it is a voluntary audit, it is not statutory. You give a report. Any comments you have got to make?
Yeah, the follow-up question that I've got is, sir, like for example, sometimes they issue the financials to the bank and the bankers require them to attest the financials. So in that case also, do they have to give any report to the bankers?
Yes.
Okay.
The moment you are putting a signature, the moment you put a signature, you got to give a report. Always write subject to our report of event date, as we do in case of companies hereafter, and these things also. Give a report. The banker also will read the report. Whether stocks have been verified by you or not. Now they have mentioned some figure. How will the banker know that whether you have verified the stock report? Or have you verified the stocks? There you mentioned that stocks have not been physically verified by us and we have accepted the figures as given by the manager. Let the banker know. Or if you have physically valued, do that. And now what I would advise is you value the stocks and charge separately for stock values. Revenue operation, generate income.
Okay, sir. We have another query in the Q&A section. I'll read it out for you, sir.
Yeah.
Question is from Mr. Amit Kumar. Please advise if this NCE format is applicable when only a tax audit is required, and also comment on depreciation in such case.
No, it is applicable to all the entities. All the entities, whether or not tax audit is done. Hereafter, if any chartered accountant is putting his signature on a financial statement, this format will be applicable. The guidance note says that very clear. It is also applicable to the societies. It is also applicable to the trusts, unless there is a separate format.
So basically, wherever there is any attest function done by the chartered accountant, the
Yes.
this format is to be followed.
Educate
All
your
the
clients.
queries are answered, sir, for now.
Educate all your clients. Tell them that should be in this format. What I would advise is, in most of the cases, you people make out the accounts also for. They give only the information, you make out the accounts. When you are constructing your tree, either tally or whatever following you're doing, put those things only in the format as given by the institute, as per the guidance. So if you are taking the balance sheet, say that reserves, say owners funds, instead of saying capital account, say owners funds. In that again, you say the capital, say drawing, remunerations to partners, whatever heads are there, take it separately. Don't simply credit it to the capital account. Take it to that account. That will give you an easier access when you are making the financials. P&L account also say very clearly on the income side, say operating income. Under that, take it as a group, and under that, you take it as, say, maybe sales or services or X, Y, Z or whatever. That's what you can do.
Okay, sir. So we have received another query, sir. Shall we address that query or shall we proceed, sir?
No, we'll address the query.
Okay, sir. So another query is from Mr. Lohit. Sir, are the financials in the new format mandatory for primary agricultural cooperative society,
Yes.
as there is no prescribed format in the TS Cooperative Societies Act 1964?
Yes. They are compulsory for any other non-corporate, because for any corporate entity, then format is given by the presiding law.
And also, does the society, so you're saying,
Now,
sorry.
since the primary agricultural society has no formal law, that becomes a part of this.
And in
Normally, see, you've got a Cooperative Societies Act which gives you the format. This will not be applying to you. You were saying something.
Yes, sir. There's another query in continuation to this, sir, from Mr. Lohit. And also, does the society need to change its present cash basis accounting to accrual basis for accounting in view of this guidance note?
All the more necessary because you are going to attest the society's financials. They have to change. No more cash basis. Very interesting questions. I'm very happy.
Yes, sir. All the questions are answered for now, sir.
Okay.
Request you to please proceed, sir.
Right, sir. Thank you. Excel.
Yes, sir, it is visible, sir.
Visible, right. I think I'll take help of this. We created a dummy entity. It's a dummy entity. We created a profit and loss account and a balance sheet. If you see, name of the non-corporate entity, I've mentioned it only as a new entity. Balance sheet as on, I've given two dates, 31/3/24 and 31/3/25. Now, the first item is owner's capital account. Here, Okay. Now, this I'll take you there. So go to notes. This is the details. Like again, you see, one is brief about the entity. Are you able to see this?
Yes, sir. Yes, sir.
The participants also will be able to see
Yes,
this.
yes, definitely, sir.
That's nice. Very good. One is brief about the entity. I said the entity is a proprietary firm set up in 2004 dealing retail household items. Brief about the entity. Or it's a partnership firm. It's a hospital run by a partnership firm, or it is an educational institute, or whatever it is. A brief about the entity should be given. Then significant accounting policies. Stocks are valued on revaluation or first in first out method, or whatever method they are for. Books of accounts are maintained on accrual basis. Depreciation is charged as per the income tax rates. If this is the case, you've got to qualify saying that the income tax has been charged on the income tax rates and this should be charged as per the rate, then the significant variation will be so much. You've got to give a disclaimer there in the audit report. Then it says about the capital accounts, name of the partner, proprietor or the owner, share of the person in percentage, asset, the opening figure, capital introduced during the year, remuneration for the year, interest for the year, withdrawn during the year, share of profit or loss, and as at the end of the year. Now, this link is provided, this 3,47,000, whatever is this, is provided to the balance sheet. See here, how do I remove this? Yeah, here it says note 1 to 3, J18. So I've given that link over. That's what it is. So you have got to work out these schedules very carefully. It will go here. Then long-term borrowings is 3,57,000. Again, this will take you there. And here we are giving very clearly long-term maturities. In borrowings secured, term loans from banks, from other parties, it's nothing. Loans repayable on demand is not there. Deferred payment liabilities, loans and advances from related parties, current maturities of the long-term borrowings, and this is my total. And in unsecured, you have got term loan from banks and other parties. And here, loans and advances from related parties, a separate item has been given. One is spouse, other is daughter-in-law. So these are my total borrowings. So first you fill up these notes. Take some time, go through these notes, that will give you a lot of information. Then this is how you get the balance sheet figures here, one after the other. Then other long-term liabilities, note 7, we have seen that just now. Long-term and short-term as given in one single sheet. Other long-terms. Then you down to provisions, long-term provisions and short-term provisions. So you should be able to work out with this. This is about the balance sheet. Each item, first you fill up the notes, provide a link in the main financial statement to the notes. Whatever you do, whenever you build up your accounting software, use the same headings so that there will not be any complication. That will in fact help you very much to prepare these statements. Now you see this property, plant and equipment. This again, you go there, you will get the total. Tangible assets. Notes of the name of the entity, notes forming part of the financial statement for the 31/3/25. Under this again, the bifurcation. Freehold land, buildings, plant, equipment, furniture, vehicles, other current assets. So each item and the sum total will go to the financial statements. Then the intangible assets. Deliberately, we have not taken any intangible assets because very rarely we have anybody having these items. Capital work in progress. These items we have left it blank. Very rarely we have these items. Non-current investments. Again, this should be split. Here we should specify the nature of investments. Shares of limited companies, unlisted shares, government bonds, gold bonds, sovereign gold bonds, whatever it is, you should mention the nature of investments. So each item you have got to give the total here and go to the note, you'll be able to get it. Now I'd like to invite your attention here to current assets. It says short-term loans and advances. You got to give here sundry debtors, capital advances, loans and advances given totally 22,000 rupees is advance tax and TDS. It is taken as other loans and advances. Prepaid expenditures can come there, but I feel that this advance tax and TDS at source, net of provision for income tax rupees so much is to be shown here. I feel that it would have been better had they put one more figure, one more line here as the amounts with the taxation authorities. Like say, for example, GST input, he has given a line here. If you see row 120, it shows GST. Similarly, I think they should have given one more line item with the income tax authorities. Either refunds due or TDS or advance tax paid, so on. And they have shown VAT credit receivable, the format given by the institute, and SENVAT credit receivable in rows 117 and 118. This is gone long back. We don't have any SENVAT credit and VAT credit now. You only have got the GST items. Service tax credit receivable. I don't think anybody has got any service tax credit receivable now. It will not be there. So certain of the line items might have to be changed. You can customize it because this is generally given by as a guideline, but you add, what I would advise is show advance tax as a separate item under the at a different place. It cannot be shown as other loans and advances. Take it as a separate item. Take it as other current assets. And again, you see, it says one more item here, 122. Balance with government authorities. Under this, maybe you can show advance tax and TDS, not under that. So there are certain small shortcomings which we can adjust it to suit our requirements, but overall the format is the same. Then it says other non-current assets such as security deposits, prepaid expenses, and others. It could be a dealership deposit. If I want to deal in a particular product, maybe the manufacturer would ask me to deposit certain amount with him. That can come here. The dealership deposit. The rental deposit I give to the owner of the building where I have taken it on rent should come here. Because they are generally long term and they should come as other non-current. Then you got inventories split into raw materials, work in progress, finished goods, stock in trade, stores and spares, loose tools, and others. Now, loose tools cannot be a part of the plant and equipment. It cannot be part of the PPE. It has got to be a part of current assets. Say in case of hotels, the cutlery crockery is shown as a current asset, not as a part of the PPE. Yes, sir. Now I think our participants have got more questions to ask, or do they need some more time to digest this? So the participants, please shoot your questions. Let's take some time on that.
I've received some questions, sir. Shall I ask?
Yeah, please.
Okay, sir. One person is asking, sir, is there any definition given for related party? Like which definition do we follow for reporting the related parties, loans from related parties?
AS 18.
Okay. Yeah, one of the participants is asking, will we get the PPT and Excel of the session?
That's you should answer.
Yes,
Excel, no. Excel, no. PPT, I can give.
Yes, because Excel is just a sample data which sir has prepared.
Now, look, gentlemen, Excel is my intellectual property. I
Yes.
created this. I made all the data. I provided all the links and other. Let them make it. PPT part, please share.
Yes,
Not
sir.
the Excel part.
The PPT will be shared on our WhatsApp channel.
Please.
And you can just
Not the Excel.
yes, sir.
Because I think I made my people sit and work on this, and they have to spend a lot of time to first is make a trial balance, then prepare the notes, and from these notes to the P&L to the balance sheet, etc. I just can't give it like that.
Yes, sir. So another participant is mentioning, thank you, sir. The session was very detailed. As per my limited understanding, the main task will be to change the depreciation because we have been following the depreciation as per the Income Tax Act.
So there are so many things you have got to change, gentlemen. Depreciation is not only one part. Till now, you were simply signing the financial statement where there is no classification of loans and advances. They were simply saying that loan from X, loan from Y, whether short term or long term was not given, whether secured or unsecured was not given, nature of security was not given. You got to change that. We never have spent any time on the valuation of the inventory. Take the value as given in that. Simply put your signature, verified and found correct, and put a chapa and finished. No, that will not. And they're building a more responsibility on the auditors. Do that and do charge fees. Again, you see, income generating opportunity.
Another participant is saying, for partnership firms or LLPs, having limited activity and we do not attest any of the financials. So can we continue the old formats or do we require to change the formats?
If you're not attesting, you're not bothered. Let them do whatever they want. Why are you asking me? We are concerned only when we attest it. I think in one of my earlier slides, I have mentioned that attestation is not mandatory for these entities. If you're not attesting, don't do it. But if you're attesting, this is mandatory.
Okay, sir. And one last question which I've received is
And then now, slowly, they are going to be insisted by the bankers because already the bankers are working on this. I told you, I think they are fixing up sometime towards the end of this month. One of the bank has asked me to address their branch managers on this aspect as to what aspect should they look for. So I'm going to train the bankers on how to look at these things. So they're going to insist sooner or later it will come out.
okay, sir. And one last question which is asked is in the PPT of P&L, it was mentioned that the mandatory expenses that are to be reported or mandatory line items that are to be reported.
Yeah.
So this means that whether we have that figure or not, we need to report those
Put nil,
items
put
mentioned as
zero,
nil.
put zero, put it nil because it's a mandatory line item.
Okay, so we have the liberty to add any field if we want to elaborate, but we cannot
Yes.
remove any field.
Yes, yes, yes.
Okay, so that's all the questions that I've received, sir. I think we have received one more here. One second, sir.
Yeah, please, please let them ask any number of questions.
Another question is from Mr. Ramesh. So can we remove the blank columns with zero value in schedules and subschedules?
No, put zeros. Schedule is given by the guidance note. Put it zero.
Okay, sir.
Now,
We'll wait.
just in this Excel, I have shown you that we are not taking any item, but I carried that item. Only for this purpose, I've carried that item. Like intangibles, I think I've shown you very clearly. Even in the format, in the screen, which is now standing, you see, I only shown trade receivables. If you see row 147, secured considered good nil, then considered unsecured considered good, others are zero. I've not removed them. Let them be there, put a zero, put a blank.
I think, sir, all the questions are answered.
I think I've completed much earlier than the time you've given me.
But you have completed right from the basics, sir. Everything is explained by you in detail, sir.
To the best of my knowledge and my ability. Normally, this is a 1 hour program.
Yes, yes, sir.
Even at in the institute, I covered in 1 hour. It's a 1 hour program.
Yes, sir.
Including this Excel is 1 hour.
Mm-hmm.
So if any of the participants have got any doubts, I think I've given my number on the PPT. Every slide carried it. You want me to share it once again, or you're going to anyway share it with them, put it in the web link?
Shall I tell your number to the participants, sir?
Yeah, yeah.
Okay, sir. 1 second. I'll read out the number of sir.
I can tell as well. I mean, you have to search. I don't have. My number is 98490 41466. If you see the PPT, on every PPT as a footer, I've given my firm name and also my mobile number. Any questions at any time, you're most welcome to put a WhatsApp message. Please don't call me. I don't know whether I'll be in. Already, I think I've received about 14 WhatsApp messages while I was doing this session. So I have asked my son to hold the phone and don't reply any of the things, let them say it. So please leave a WhatsApp message. I will come back to you as soon as possible. Don't expect immediate replies because you are queued. So you are in queue, please wait. Any other questions, ladies and gentlemen over there? I cannot see any of you, but in case you got any questions, we have got a wonderful moderator there, Mr. Vivek Agarwal. You can always reach me through him. And he has done an excellent job. And I think formally, I should thank the Agarwal Chartered Accountants Society for having me to speak on this. I really enjoyed doing that. And it was very nice correlating, coordinating, and talking to this young boy. And
Thank you, sir.
yes, gentlemen, you're very young as compared to me.
It was indeed my pleasure, sir.
And for the participants, the father of Mr. Vivek Agarwal, Sri Hari Agarwal, and I are very good friends. So he's son of my very good friend. So I don't think there's anything wrong in saying that good boy.
Thank you, sir. So we'll proceed with the next session, sir. Next segment of the session, sir. It is my privilege to propose vote of thanks for this webinar. I, on behalf of Agarwal Chartered Accountants Society, extend a hearty vote of thanks to CA Shri Kali Prasad, sir, for sharing sir's knowledge and insights. And sir has explained all the topic in detail, right from basic level, and sir has explained line item wise with his sample data of Excel sheet. Thanks a lot, sir, for that. And as a token of our appreciation, we'd like to present a small memento to sir. Please wait, I'll share my screen, sir. I hope you are able to see my screen.
No, I'm able to see you.
Okay, sir.
Obviously.
Okay, sir. Anyways, I'll be sharing this memento with you, sir.
I thought you were going to physically send it across.
Yes, we'll share it physically as well, sir.
Oh, yes. So nice of you. So it has been very nice talking to all you people over there. So let's meet more often and see what best we can interact with each other. As Vivek was saying in his opening remarks, as we as seniors are privileged to know things a little more than what you people know. So anytime you feel that I could be of some help to you, please feel free. You can always reach me. I've given you my number, or even through the society or through Mr. Vivek Agarwal. I deem it a privilege to be of any help.
Thank you, sir. I thank all the participants for patient hearing. Thank you. Thank you, sir.
All right, sir. Bye.
Bye, sir.